how is climate change, the climate change talk, but actually the impact of climate change, changing and influencing Zurich's underwriting, but also the type of investments you make?
Yeah, the visible impact of climate change has been on natural disasters, and in the last years, especially in 17 and 18, we saw a lot of examples of this, but recently Australia is another example of how this can impact the life of people. Also, we are changing the way we underwrite our risks, and we're trying to incentivize companies to move towards carbon neutral emissions. The problem is that although we follow strict rules and we have eliminated the coal insurance and now we are progressively eliminating tar sands companies, still the price of carbon, the price of pollution is not reflected in the economical decisions, and this is something that we should tackle.
Okay, who should actually take the lead on that?
I think it's the government. I think it is the institutions. Private companies cannot do that. We don't set prices, and especially we don't set taxes, because this is what this is all about.
I mean, so I was speaking to the IEA yesterday about this carbon price. You know, how do you actually measure it? How do you set it? How are you making sure that there's a level playing field?
But I don't think it matters so much that there has to be a level playing field. I think there has to be a way to reflect the impact of emissions, and even if it is different by countries, I don't think it matters. The planet needs now to take control of these carbon emissions, and we live in economies where the pricing is the vector of information, and if prices don't reflect these consequences, then we're in trouble, which is the situation we have today.
You're also a big asset manager. What do negative rates actually mean for you? Is this one thing that you wish would just go away?
Yes, please.
Will they go away? Or is there a danger that they'll actually go into further negative territory?
I mean, really, we don't expect that. I mean, they are at the bottom. The impact that these negative rates have is marginal already, and everybody sees that. We need now, real fiscal changes, and we need structural changes to invest and to restructure. The planet at this point needs a set of investments which is massive in size and has to last for many years. You know, the negative yields do not help. We need a different fiscal transformation in order to allow this to happen.
If you look at sustainability, will it actually, the impetus come from finance? And you say you incentivize. If you say, look, I'm not going to invest in your company if you don't have these 3 requirements, how difficult is it to do that with negative rates? Because it's just much more difficult to make money overall.
Yes, it is for sure. We fully accepted that from the beginning. Okay. We don't think there is any way out of that. We're not looking for smart investments which can make the returns. We're just accepting it, and we have adapted the business model to work with the negative yields or with zero returns on the asset management. It's difficult. It's not fun, and eventually we don't think it's useful, right. But we still make enough return to our shareholders that they're pleased with us.
What are you most worried for in 2020, and what are you most optimistic about for 2020?
I think the economies are fine. I mean, last year was an exceptional year. Definitely, we're not going to see that again. A lot of the positive of last year's were induced by the central banks, and I don't think the central banks have any chance this year to surprise as they did last year. But the economies are good, the fundamentals are strong, and so we still expect a positive year. What we fear, we fear, of course, the things that we don't know, especially the things that belong to geopolitical relationships. We fear attrition, war, wars around. But the economies are strong, and they will continue to push this world further and better also this year.
Are we looking at, if we look at geopolitics, are we pricing risk accordingly?
Not really, not really. And these geopolitics so far are not really impacting the trends. They're more impacting the daily trades. They go up and down by days, but they have not created yet a trend. I mean, we haven't seen investors shying away from areas of the world or from in given industries. It's more a daily theme. Whenever something happens for a couple of days, you have an immediate reaction, and then it fades away.
How are you seeing your industry being reshaped by all of these confluence of things? Are we going to see more M&A, or insurers going to have to get bigger in size and scale?
I would say that the retail part of insurance is under a transformation upside down. I don't think it's going to be M&A the solution, but I do think that a number of companies will just disappear. The world in retail is changing. Insurance is becoming a service industry. As every service industry, the customer is making the decisions and is walking in or walking out. When the customer walks out, you're out of business. When the customer walks in, you thrive and you succeed. And this is what's happening in insurance finally. Customers are moving. They haven't been moving for years, right? I mean, they never thought about changing an insurance company. Now they do that more and more, which is a great news for all of us.
But if you believe that so companies will go out of business, is there a catalyst, or will it just happen over time?
It's happening very fast. It is happening. It is happening. It's not in the future. It is today. Customers are making decisions every day, and they move out. I mean, we started 3 years ago tracking precisely customer satisfaction, and it's amazing how much it matters and how important that is. It's a trivial truth that customers take the decisions, but it's so important to think about that every moment of your day.
What were renewals like in January for Zurich?
Strong. We are in a good market position these days in commercial, where we are taking advantage of the hardening of the rates, and we have, I would say, satisfactory profitability. We're pleased with that. And in retail, where we're growing again very positively, and all the efforts that were put together for customer development and customer retention, they're paying off.
What are you most looking forward to for the rest of the week? Are you here mainly to do business?
Really, yes. Frankly, yes.
I mean, I know I've seen you here for the last, a number of years, let's say 5 or 6. I think it's more like a decade. How has Davos changed through that time?
I think there have been years where there was a sense of emergency, especially around the financial crisis. 2008, 2009, 2010, there was a sense that the world might not have a bright financial future. Lately, it became more complicated because you have to talk about the next 30 years. And this is a different scenario to tackle and to approach. But the business side of it has remained extremely important and interesting around these days in meetings.